Well, welcome to Tim's Take, and today we have a very special guest on a very timely topic with Dr. Ben Brown, the Extension Specialist, Row Crop Economics. So, Ben, we're taking a beating here the last several months, and we had a new report came out today.
Yeah, and so we're filming this the end of September on September 30th. And we get the quarterly grain stocks numbers 4 times a year. The importance of the September grain stocks report is for corn and soybeans. This represents the end of the marketing year. And so the grain stocks numbers that we have on hand as September 1 are the official ending stocks for the old crop marketing year, and they become the beginning stocks for the new crop marketing year. And for corn, the numbers were bearish. We actually had almost 200 million more bushels of corn than what was expected.
As old crop or new crop?
As old crop.
Okay.
So let me back up and just kind of explain. So this is a point estimate. Basically, this says as of September 1st, how many bushels of corn, soybeans, wheat, grain, sorghum, cotton, rice, whatever it is, right? How many units, in the case of corn, how many bushels do we have on hand, whether on farm or in commercial storage as of September 1? And it's a point estimate. We get it at the end of the month. That way it gives time for tabulations and things of that nature. But because the marketing year ends for corn and soybeans on August 31st, the new marketing year starts on September 1st. And so whatever we haven't used that's still sitting in either on-farm storage or commercial storage becomes the beginning stocks number for the new crop marketing year. And so what the corn numbers today showed was that there's more corn out there than what was anticipated. This doesn't necessarily surprise me all that much. We've had very strong corn exports so far this year. This summer, corn exports were very strong, and they continue to be here this fall. We've had solid grind for ethanol production, taking corn and turning that into dried distillers grains and ethanol. Both of those categories go through a checkpoint, right? When you take corn to an ethanol plant, they show receipt for that corn. When you take corn through an export terminal, there's a receipt for that corn. The largest category that we don't have any records for is feed grain use. And this is largely corn that's just sitting out across, large feed consuming areas. Think of western Missouri, Kansas, Oklahoma, Texas, Nebraska, Iowa, South Dakota, right? These areas where we feed a lot of corn, a lot of that never goes through a checkpoint. It might get delivered to a feed yard somewhere, but it doesn't ever have to really go through a checkpoint. So when I think about where this extra corn's coming from, I'm sitting here and saying, well, it's showing up in these large feed grain areas or feed consumption areas. We don't have as many cattle in the United States. We continue to liquidate our breeding herd. That doesn't produce, when you cut down on mama cows, you don't have as many calves to send to feedlots, and so
because the price is so high.
Yeah. Well, for a number of factors, but one of those right now is we've been asking people, why haven't we been seeing cattle herds rebuild? And you ask producers and they say, well, why in the world would I give up the profit that I could get today for certain for that heifer versus retaining her at the risk of having an unborn calf or, a calf 18 months from now that I can sell? And so that's one of the challenges that we've had with rebuilding this herd. But it's not just the domestic cattle herd. It's also we're not seeing cattle move north and from Mexico. Normally, Mexico would send us a couple of million head of cattle to feed. They're born in Mexico. They ship north into the United States to be fed in places like Texas and Oklahoma. Because of the New World screwworm outbreak that we've seen, the border for live cattle trade with Mexico and the United States is closed, and it has been closed for several months to help prevent the spread of New World screwworm into the United States. So those cattle aren't coming north to be fed. Instead, what's happening is we're sending corn south, only instead of it showing up in the feed category, it's showing up in the export category. And I don't see the border between the United States and Mexico opening anytime soon being defined as probably the next couple of months, because we just haven't seen the control of spread of New World screwworm in Mexico. So I think that's going to keep the border shut. We'll probably see larger than normal exports of feed grains, corn, grain, sorghum, and wheat to Mexico in the exchange of not feeding as much here in the United States.
And that was a 200 million bushel?
Yeah, so 200 million bushel surprise. This was the largest bearish surprise that we'd seen in a grain stocks report since December of 2020. And so this is, while it's large, we have seen larger surprises, but this was definitely a large bearish surprise to the corn market, and will create some price headwinds for us as we move forward. I talked about how this is the old crop supplies, right? This is as of the end of the marketing year. We have 18.2 billion bushels of corn here in the United States. Currently, that's what the expectation is of corn that we will have produced this year, corn that is that we thought we were carrying over, and I'll come back to that statement there of thought here in just a second. But 18.2 billion bushels is the largest supply of corn that we've had to deal with ever. In fact, we've never had above a 17 billion bushel corn crop. So to go from high 16 billion bushels all the way to 18.2, that was prior to today. We have 200 million more bushels now, almost 200 million bushels more now. So that takes that carryover from 18.2 to 18.4 billion bushels of corn supply. In some ways, we could say that it is amazing that the cash corn market has been hovering in the high $3 range to even at times $4 cash corn, given how much corn we have in supply.
Oh my goodness! And there's no big cattle herd to start feeding.
Correct. Yeah,
and that's what because I think animal scientist folks said it takes 5 years before you break even on a heifer by keeping her back. It takes 5 years to break even.
Yeah, that's an
investment.
Yeah, so we call that capital budgeting, right? Mm-hmm. And so like the repayment capacity, and certainly that's those returns and those out years are uncertain, right? Like we have an idea of what a steer price might be 5 years from now, but there's a lot of things that could change that. So you also have to bake in some risk, some return risk into those out years.
No, our poultry and pigs can increase quicker though, couldn't it?
Yes, and we do see turnover. Poultry has been one of those areas that's been growing a lot in places like Missouri. We see a lot of interest for poultry and layers. I talk and work with quite a few people in this sector, and one of the companies that builds poultry barns currently has a 3-year wait. And so if you want to build a barn today, it would be 3 years before they could actually get to you. The waiting list is that long. So there's a lot of interest in this space. One of the challenges just from a corn consumption side is, this is an industry that got hit really hard with high path avian influenza, the disease that killed poultry. And so that's part, so on one hand, the lack of birds because of the disease has been what's created the economics to expand and see an expansion in poultry. But on the other side, you don't have as many birds to feed because of the disease. And so a little bit of a trade-off there, but we do see poultry as a growth sector for Missouri and broader regional commodities, especially soybean meal. I think we'll continue to see growth in soybean meal consumption, primarily for poultry feed and other products too, but poultry seems to have the biggest growth area for soybean meal consumption.
So was our new crop corn about the same then?
Are you talking about the supplies or when you say new crop corn, what do you mean?
The estimation on the crop size.
So the stocks report is all corn together. And so it's a point estimate as of September 1, right? The 18.4 billion bushel estimate is the new crop. That is the 25 that's being harvested right now. That'll be marketed all the way for the next 12 months, right? End of August. So 18.4 billion, that's taking the 18.2 we thought we had, adding 200 million more to it today after today. So 18.4 billion would be the new crop corn supplies that we'll have to chew through in the year ahead.
Oh, wow. And now a lot of folks thought that was overestimated.
So we have heard a lot of reports, and I've gotten quite a few as well, of this crop faced all sorts of challenges from extreme precipitation at planting to tassel wrap, remember when that was a thing, and pollination issues, to rust over the summer, especially in Iowa. And so there is a lot of concern and doubt about the size of this crop. We get estimates both from the private and public sector throughout the growing season. We're getting more this week, even from the private sector on the size of the U.S. crop. Producers seem to think that the crop is getting smaller. I also think the crop is getting smaller. But one of the challenges that we could have, and this, we're sitting here at the end of September recording this, is the USDA WASDE report, which is kind of in NASS, the NASH production report, which is kind of our public-facing estimate of the size of this crop, is set to come out on October 9th. And the government shutdown that is facing us potentially delays or even eliminates that report. And so we've seen this happen before. Back in 2013, we had a government shutdown early in October, and the October report didn't happen, and we had to wait till November to get some clarity in terms of the size of the crop. And so I would, I guess, just throw out there that when I think of my potential bullish factors to corn, soybeans, and wheat, but primarily corn and soybeans at this point, one of the bullish factors that could happen is this crop just isn't as big as we think it is. And of course, we would find that out in a public way with the WASDE report. Well, if it doesn't come out, we're waiting a couple more weeks even for that information.
There's not a lot of factors going to push the corn market then, really, other than lack of production. There's not going to be a big export or... Well,
so there could be, Tim, and this is I think what makes marketing extremely challenging this year is I think most people are aware of the challenges that we've seen or changes that we've seen in the trade environment, and we have seen very strong corn export sales this year, largely due to Mexico, but every other country has also increased their imports of U.S. corn because there's just not a lot of corn in the global market. If you take out the United States and China from the global corn picture, we're at the tightest stocks of corn relative to our use in 30 years.
Oh, really?
And so if you have if you need corn somewhere else in the world, there's very few places to look other than the United States. And that's why we've seen our corn export picture be as robust as what it is. That's not necessarily true on the soybean side. There are alternative sources for soybeans on the global soybean market. And so China is our largest buyer of soybeans. China has bought 0 soybeans this year, and that's been well documented all through the nation in terms of the challenges. You could envision a scenario to where a trade agreement gets established that includes substantial purchase commitments of soybeans, and all of a sudden the soybean market really turns around. I have a kind of a love-hate relationship with purchase commitments, to be truthfully honest. On one hand, I am a producer's son, and I want better prices for our product, right? And purchase commitments are one of the ways that we can get higher prices for our product. So on that standpoint, I'm hoping we see purchase commitments. On the other side of this question, which, two-handed economist, one side versus the other side, right? Purchase commitments can disappear just as fast as they come about, and they're not really based on any economics or fundamental analysis. They're just kind of based on a policy intervention, and that makes making decisions. This is why I struggle with this: is do I sell my soybeans or not? Well, if I believe that there's a trade deal that's going to be made, I'm probably not all that interested in selling my soybeans because there's the likelihood it includes purchase commitments. All the other trade deals the administration has made so far have included purchase commitments. So you have to think that that's a possibility. That happens. Soybean prices rally. And if I had sold, right, I miss out on that rally. Whereas if I sit here today and I say, well, what if that purchase commitments never happen, right? And I'm just eating away at my profitability because I'm storing this crop and it's costing money to store this soybean crop and the fundamentals aren't certainly suggesting storage for soybeans. Well, then you enter into a period of time where you sold too early and you missed out on the rally because the fundamentals weren't there. So that's what makes marketing in this environment relatively challenging.
But as you mentioned before we were on the air, some elevators now are cash only.
Part of that is, just the size of the crops, both corn and soybeans. I mentioned the 18.4 billion bushel corn crop, a very sizable soybean crop as well. and we're following that, or we're bringing all this to market when we had a very large wheat crop as well. Now wheat, doesn't always get stored, right? Then we move a lot of wheat in different places and we find a home for it by the time the corn and soybeans come in. But it does take up space. And so I think what we're seeing from elevators is a lack of space. And I think we're going to see this broadly across the Western Corn Belt. I think more specific to the Western Corn Belt because the Eastern Corn Belt had a drought last year. They didn't have as much production. And so their stocks from last year are relatively low compared to ours here in the Western Corn Belt. So quite a bit of supply sitting out there. We're bringing a large crop to the market. And I think elevators are saying, hey, we don't have anywhere to go with this either. The only way we'll take delivery of your soybeans is if you sell them to where we can put them directly onto our rail car and send them somewhere. And so we're hearing more and more reports of that. We're also hearing storage rates. If the elevators that are taking storage of product, those storage rates are increasing as elevators work to say, hey, we will actually discourage you from bringing that crop to us. We want you to keep it. And they do that through basis, by changing basis levels, and through storage costs, commercial storage costs.
Yeah, how are the basis around? Are they?
Yeah, so this is something that changes all the time, and it's one of those things to where basis can look very different in parts of Missouri than other parts, and we also have to keep in mind the time of the year. Right now, corn basis for spring delivery, March, is actually pretty competitive to where we typically see it. And so, or strong relative to, I guess, where we would typically see it. And I think that kind of speaks to this nature of, you didn't ask the question, but I'm going to kind of answer it. The economics certainly suggest storing corn over soybeans. If you only can store one crop, corn seems to have the better fundamentals compared to soybeans in terms of storage. On the soybean side, basis bids are weak, both for current delivery and future delivery. We have a lot of soybeans, and we're trying to find places for all these soybeans to go. And elevators, like we just mentioned, some of them are saying, hey, we'll only do cash delivery, and they're discouraging the delivery of soybeans, and they do that through weaker basis bids.
So it's really the worldwide demand for corn that's going to be that thing that could push us for some higher prices in November, December, January.
Sure. So I think we're setting up very similar for this winter that we did last year. I think we have a very similar opportunity of a very large crop. Keep in mind, last year's crop was a record as well. This year we had additional acres, and at least as of right now, additional yield. And so that leads to more production. One of the things, though, that has really kind of transpired, and maybe people are aware of it, we're just not talking about it as much, is Brazil continues to increase the size of their second crop corn production. They had a very large second crop corn this year, but it gets planted in January. That's when their corn crop gets planted, following their soybeans. And there was a lot of expectations around the size of that corn crop. It did end up, it did produce a sizable corn crop. But in January, there was actually quite a bit of risk premium built into the market because there was fear that the drought was going to hamper that crop production, right? The size of it, just like we see here in the United States in June and July, you start to get a dry weather pattern that kind of materializes in a prime growing region of the world, and it can have impacts on prices. And that's what's happening a little bit with our corn market is we probably, not that long ago would have considered March to be an attractive time to move corn because elevators and ethanol facilities here in the United States were needing corn. And so it would attract kind of some of that spring delivery. I would argue it's starting to move a little bit earlier. It's getting closer to a January or February window because that's when we're seeing the risk premium kind of come into the market from a South American corn crop. And so all this to say, Tim, that's where I'm going with this is the riskiness of South America is providing us some price opportunities outside of our growing season. And we see that in soybeans as well. The size of their crop is very large. And so any type of production challenges they have feeds into the global marketplace as well. What
was our soybean? Was it bearish on that too, on the report?
Oh, so the grain stocks report that came out today was very close to expectations.
Oh, was it?
Soybeans, if you think about the soybean market, we don't have the phenomenon that we do in corn to where we have soybeans that never go through a checkpoint. Soybeans either get sent to a crush facility to be crushed into corn and soybeans, and so they get reported that way, or they get sent to an export terminal, so they get reported that way. We're not holding soybeans that never get marked, and so rarely do we see surprises on the soybean side. The soybean crop, or the soybean stocks numbers at the end of the marketing year were 26 million bushels lower than they were last year.
Oh, really?
And keep in mind, last year we had some yield challenges in the back end of the marketing year. It got dry, very similar to this year as well. And I think we're going to see the same thing. I think we're going to continue to see soybean yields come down, although the early reports so far have been pretty strong. I think we're going to see soybean yields come down, and I think there's the opportunity for even a smaller soybean crop, but I will say that one of the things that's countering that is we're just not using as many soybeans, and global supply chains take a while to change. In the long run, they might look very similar to where they are at today, but in the short run, we have a lot of beans, and we're trying to figure out what to do with them.
Now, some would argue that we haven't exported any to China, but there's only so many soybeans out there. If they don't buy them from us directly, maybe they buy it from us indirectly.
Sure. Thank you for asking the question. I was kind of answering the question without you asking it, so I appreciate you asking the question directly, right? This is a question I get all the time. If China's buying soybeans from Brazil, well, then can't we sell our soybeans to where Brazil was selling their soybeans? Brazil's largest buyer was already China, and so they were already selling into that market. The last couple of weeks, we saw Argentina reduce their export taxes on product, and we could get into export taxes and how Argentina operates as a government, but they reduced their export taxes, and in a period of about 48 hours, China came in and bought several metric tons of soybeans that would have likely been from the United States. And so we could add Argentina into this mix. Well, if Argentina is selling their soybeans to China, can't we just sell our soybeans to where they sell? History has told us time and time again, and we could look at multiple things, the most recent being the Russian invasion of Ukraine and the challenges we had in terms of moving supply chains around as a result of that. We have this term in economics called slippage, and basically what it means is that markets and supply chains are already selling their product to the most efficient place to sell them, right? Whether that be based on transportation cost, logistic proximity, something like that. And so markets are already operating in an efficient manner to the current scenario. If you shock it and you start moving these things around, you move places around, you do get some substitution. For us, instead of selling soybeans to China, we're selling a lot more soybeans to Egypt. And Egypt is becoming a very good buyer of ours. That's an example. The difference, though, is instead of getting one more bushel from the rest of the world that we would have sent to China, maybe we're only getting 75% of a bushel, right? For every 4 bushels that we used to sell to China, we're only getting 3 bushels from somewhere else in the rest of the world. That's what we call slippage. It's showed up time and time again. And so that'll happen in the short run. We won't see a complete substitution of product in the short run. In the long run, it balances way back out. And by long run, I mean it'll take a couple of years. Relationships have to be built. Logistic markets have to adjust, and so it'll change. But what happens in the short term is we create these price wedges where soybean price increases in Brazil and Argentina, encourages their producers to produce more. Soybean price declines in like the United States and discourages our producers from producing soybeans. So we see those shifts too.
All right.
That was a long-winded answer.
Oh, no, that's great. So that recaps corn and soybeans, and it's marketing too. All right. Well, that's it for this Tim's Take, and we'll talk to you next time.